Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly, and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Hey everybody, welcome to the Laughing Stock. I'm Redneck Johnny. And have you seen this new news here today? Roaring Kitty is officially back. He's going to stream tomorrow. I'm very excited for it, and you can see he has up here upcoming stream. 15k people are waiting for it right now, and the chat is just going in crazy. And I'm very curious to see how this is going tomorrow, what he's going to talk about, and you know, he's involved in GME again heavily, so. It's gonna be good to get some update also on how he's been doing, and like I hope he can provide us with some information about what he has been doing all this time that he has been gone. And I'm also very curious to see if he continues to use the spreadsheets, and maybe we can see if he has made some updates on to his sheets that we can try to recreate in our sheets, Dane and myself. So. And hopefully we can also compare some of the numbers that he has and check them if they are if we are close, you know. So yeah, this is amazing news. I think I was wondering all this time if he was actually on the stream, and I thought there's no way he's gonna do it because just because like you see now the chat is going insane, and I bet there will be even more tomorrow. And he needs to be super careful on what he's saying, I guess, when he's in the position that he's now, because this is a new position for him. He actually has some, he can destroy markets now with what he's doing, and you know, it's crazy. I'm very interested to see how this pans out and where he lands, and like just his thoughts on everything, and maybe some updates also on his style and stuff like that. So I'm not sure if I can make it live tomorrow, unfortunately, but I will definitely watch it in a replay, and you know, probably gonna go back and take some notes and all that stuff that we used to do when we started this journey. And yeah, I just can't believe it. I can't believe it that he's back properly. You know, we saw his tweets in May, beginning of May, or like a couple of weeks out in May, and then we were wondering, we were curious, we talked about it on the stream as well, like, what is the plan here? What is he doing? Because he was just posting all his memes, and the stock price in GME went crazy back then too. And then he has been a little bit less. He started to post his positions on Reddit, which is massive. And then the stock price didn't move too much on that, but now it has actually it has moved a lot just by him announcing that he's gonna do a live stream. We can check GME straight away. Hey Value, how are you doing? I saw on Dane's stream that you were sick, so I hope you're doing well, man. And give me your thoughts on this. The Roaring Kitty streams are gonna come back tomorrow. I bet you will watch it, Value. Look here, GME up almost 50% today. It landed up above 42, and it's now at 46. And check the volume. The volume is crazy here. It's like insane. I have no position in GME. I'm debating all the time if I should jump in or not. I probably should, but I haven't so far. Look at this volume though. You have, this is still big, but you have some slow days and then boom, straight up to over 100 million, almost 200 million today. They reached 200 million on May 14. This was straight after he started to tweet. Look at this. That's a lot of volume. So there's a lot of momentum here, and who knows where this is gonna end. Yeah, feeling a bit better. Excited for tomorrow. Good to hear, Value. I hope the COVID disappears soon, and yeah, are you gonna be able to watch it live or what? I think I will be busy, so I can't watch it live. I will try to get some bits and pieces if I can, but yeah, probably I'm not gonna be able to watch it, which sucks. I really wanted to watch that one live. If you asked me like 3 weeks ago, I would never expect him to come back streaming. And I even thought when he started to post that he would, if he went back to YouTube, I was thinking that he was going to do videos, because then he can control the conversation a little bit more and all that stuff, you know, and edit if he says something that he regrets or something like that. And the chat is not there, so it's a bit more quiet. But I think I love it. I think it's so cool that he's doing live streams again. Can't wait. Nice, Value. Gonna be at 4 a.m. to watch the stream. Nice. It sucks a bit for you guys over there with the time difference, but good. I like to hear it. Well, we're gonna talk about that stream on Saturday or Sunday or whenever we're gonna stream, Dane and I. So tune in for that, Value. We would love to hear your thoughts as well on the stream, you know. But crazy times. Look at the chat. Yeah, it's gonna go off tomorrow. Look at it. Insane stuff. 15 people already waiting, and you know, it's just a scheduled stream. And I love the I love the thumbnail already. Yeah, I'm very curious to see how this is going. I talked with Dane about it today, and he's the same. He's very excited and can't wait to see like what I'm most curious about, actually, because I'm not involved right now in GME, so I'm just finding it entertaining and you know, educational to watch what's going on the sidelines. But what I'm most curious of is to see if he has changed his strategy and his sheets, and if he has added stuff to it or taken stuff away. If he talks about his strategy, or maybe, you know, talks a little bit about some developments and stuff like that. To compare the numbers will be very exciting to see how close we are. Because I compared it to some of his streams back then, so I know I was somewhat close, but I also know that I was it wasn't the same numbers, so I wasn't 100%, you know, but I found it close enough to be confident that I could use the sheets. So yeah, that's gonna be good. So Value, is there a lot of talk in New Zealand about Roaring Kitty and that he's back and stuff like that? I know you have a lot of TV channels with finance and stuff like that, so I assume that it's all over the news there too. But very, very cool. His channel here, you can see here, I've been waiting for a new one for forever. So this is so cool. The last one, he had 1.2 million views. So, yeah, good times. Comeback, proper comeback now. I thought maybe, I didn't expect him to even do videos on YouTube. So I thought he was only going to tweet and do stuff on social media a bit. But yeah, coming back to YouTube. I love it. All right, let's move into the dashboard and start to do some stuff. I have 4 tickers up already. They are not super interesting, and in the headline you can see also I am mentioning SFIX and SPWR. They come from my tracker and we can check them out later, but they are up like around 50% in a month now. So those has been good picks if you are involved in them. I also like them on the chart. So yeah, we can check them out. I think maybe, I'm not gonna say this 100% sure, but I think Y-Sheet has some issues today because I've not been able to update my metrics and ratios and stuff like that. And I'm also getting some of them not loading in my fundamental sheet. So I'm a bit, what do you call it? Like a bit injured today with my sheets. They don't fully work, but they will work good enough to do the research and like normal, but there's just a few things that I'm missing, I think. So corn was up today. Silver 2, gold continues. Look at the gold miners here. Marijuana stocks are down a little bit again. Bitcoin are hovering around 70. I saw actually I'm in the process now to diversify and buy some new stuff in my portfolio. So I have some cash now that I'm planning to use, but I'm dragging my feet a bit. I'm very curious about MCFT now, and I saw an article on them actually that that some guy, I didn't see who it was, but here, the under radar all-stars, 3 stocks quietly crushing the competition, and Mastercraft was one of them. I'm not sure who this is. Investor place, I don't know. Steve Boyens co-founded Pearl Grey Equity and Research in 2020, has been responsible for cross-asset research and PR ever since. Before founding the firm, Steve spent time working in various finance roles in London and South Africa. He holds an MSc in investment banking from Queen Mary University of London. Furthermore, Steve obtained his CFA charter on April 26, 2024 and is working towards his PhD in finance. His articles are published on various reputable web pages such as Seeking Alpha, TipRanks, Yahoo Finance, and Benzinga. Steve's articles on Investor Place form an interesting juxtaposition, I have no idea about that word, between mainstream opinion and objective theory. Readers can expect coverage on frequently traded stocks, REITs, fixed income funds, CEFs, and ETFs. So this is the guy who wrote this about Mastercraft. He was writing like, Mastercraft is a US-based recreational boat designer, manufacturer, and retailer. I watched Mastercraft stock for a long time and engaged with Mastercraft customers frequently, so I had a granular view of it. In my view, Mastercraft's primary advantage derives from its loyal customer base. Although an anecdotal opinion, I realized that Mastercraft customers are passionate about the brand. In fact, my statements are backed up by Mastercraft's third quarter results, wherein it beat its revenue estimate by 2.88 million and its earning per share target by 25 cents, illustrating its competitive seed. I admit that Mastercraft is a pro-cyclical company. Its product line typifies durable goods. Nevertheless, I think Mastercraft stock is well aligned to recover after its approximately 20% year-over-year slump dragged its price-to-sales ratio down to 0.78x. Mastercraft is a best-in-class industry pick with a well-aligned stock. As such, I'm optimistic about its prospects. And he's just saying that he doesn't have any positions in any of these. but I am paying attention to them. I'm now just looking at the chart a little bit for when to do an entry, and you know, I'm gonna pull them up today too. There's been some heavy insider buying there from a fund called Coliseum or something. I haven't been able to find a lot of information on them, but this company has a lot of stuff that I like to see, and I'm very it's probably going to be a buy for me when I see the chart doing a little bit more that I like. And you know, I have a price target on around 18, but I'm not sure if it's going to go down there. But saying that, I've been tracking it for more than like around a year now, I think. And it doesn't move a lot so far. It's just moving up like 6%, down 6%. It's hovering around this area for a long time now. So yeah, I'm not sure how big of a drop you might get. So around 20 might be a good entry for me. But that's why I'm waiting to see a little bit. But I was close to buying the other day, but I'm still dragging my feet a little bit on this one. But you know, we have done research on them past in some of the streams, and you can look at those streams to see what we like about it. But I'm gonna pull it up today, just a little bit quick, having a quick look at it, and see. Maybe you can search again for those insiders and see what they are doing. The value. I saw another recent stream about WNC. Wabash looked promising. Need to look into that further, but would be keen to hear your opinion on it. Back down to its 52-week low, 18% short total shares, 27% short of float. Okay, Value, thanks for the ticker. Feel free, anyone who's watching, to throw me more tickers, because today it's a bit slow. I haven't found too many. I'm gonna pull them up straight away, Value. WNC. That name sounds a little bit familiar to me, but I'm not sure. Let's check it. Let's check it out. And we on Dane talked a lot about it on his last stream. We are fine-tuning some new strategies and implementing more, a little bit more at least, like some basic technical analysis to our strategy and stuff like that. So you know, I'm gonna follow some of the rules a little bit more strict moving forward, and close to the 52-week lows has always been something that weighs heavy for me, but that's gonna continue, and hopefully if they can also test the support level there a couple of times, maybe 1 or 2 times, that's something that I like to see as well. Hey Recius, good afternoon to you too, Recius. I'm not sure where you are based again, Recius, but I hope you have enjoyed your day, or wherever you are. And we just, Value and I were just speaking about Roaring Kitty, and that he's going to do a stream tomorrow. And I bet you also, Recius, will tune into that. So that's going to be very exciting for everyone, I think. Cool to see that you guys come in and watch the streams regularly now. I love it. So thanks, I really appreciate that. You know, we are not a big channel at all, but we love to do this. We're going to do the research anyway, so to stream it is just cool. But you know, it takes some time, so it's good to have some company and get to know you guys. I love it. So I'm just gonna when I'm here in Y-Sheets, I'm just gonna pull up also SFIX and SPWR, so we can check them out later. Because they moved up. They moved up quite a bit actually. And you know, Solar. If we look at the dashboard, Solar, which SPWR is a solar company. You see, his Solar is on the way up a bit. You know, from down here. Okay, it has a little bit of pullback now, but let's see where it goes. All right, last one. I'm not sure if I'm going to spend more time here I see South Africa is up. Internet is down. Technology has been a bit down, so who knows? I think it's actually a little bit before Roaring Kitty started to post. It has been a bit difficult to navigate the markets, right? All of a sudden you get a lot of moves that come straight down again, stuff like that. So it's a bit hard to navigate the markets these days, I think. But let's we give it a try anyways. So value, we can start with the ticker WNC, I think, today, since you asked. Maybe you can help me fill in some of the stuff I'm missing. I'm missing like the metrics over here. I tried to fix it before stream, but I didn't have time. So the first thing I see though is that I haven't done research on them in the last 3 months, so this will be good to pull up. And you were talking about the short interest, like right? And in my sheet, it comes up to like 18-19%. It trades at the 20 bucks, almost 21, and the market cap is almost 1 billion. So it's a good market cap, a little bit on the expensive or the high side, but nothing that puts me off in any way. I also see the share buyback here, and also historically they've been focusing on buying back shares, you can see. So that's good. I saw that they have some cash, almost 100 million now, which covers by far the short-term debt. But the long-term debt is a bit higher, but I'm going to check what that is soon. Just want to read the business description before we move on here, so we understand what this is. I don't know how to pronounce this, but the Wabash National Corporation designs, manufactures, and distributes engineered solutions for transportation, logistics, and distribution industries, primarily in the United States. The company operates through two segments: transportation solution and parts and services. The transportation solution segment provides dry, van, and platform trailers, refrigerated trailers, converters, dollies, van bodies for dry freight transportation, cutaway van bodies for commercial applications, service, a lot of things and parts for, cars and stuff. Parts and service segments provide aftermarket parts and service, aluminum and steel flatbed bodies, shelving for package delivery, partitions, roof racks, hitches, lift gates, and thermal solutions, and door repair and replacement, collision repair, and basic maintenance service. These segments also offer stainless steel storage tanks and silos, mixers, and processors for the dairy, food, and beverage, pharmaceutical, chemical, craft brewing, and biotech end markets. So they produce parts and stuff like that for other industries as well then. So interesting company here. I see also on the 3-year average the margins are up here. The revenue the last 2 years has been steadily around 2.5 billion, so that's pretty good. Capex is also up the last 3 years, but it seems like that's been paying off a little bit, They do pay a dividend, which has been fairly regular here at 33 cents, according to my set of data. So I'm just curious to see the margins on a single year development here. Should probably start to conditional format these rows as well. Been something I've been thinking about to do for a long time. It's fairly easy, so I think I will do it just to get a quick look at it, But yeah, look at these improved margins though. That's good. And Value was saying that they are trading actually close to the 52-week low, and it comes up here as 3% to the 52-week low. So I just want to check the chart real quick here. So it has a massive drop from the top here, which was 1st of April, 30 bucks to 20 bucks. And you see now what Value is talking about here, that there's some support here, right, close to the 52-week low. But if it breaks down below this, watch out, because when will it stop then? Maybe it will go even lower than these levels, you know. And you know, around 15, 16, I can see that it can end here, but yeah, who knows? This is definitely interesting on a chart basis. You see the book value here also, 12 bucks. So it does trade above book value, but more importantly maybe than that, you can see the last, if we go from, yeah, let's say the pandemic, then they have managed to grow a little bit the equity, you know, in the book value. They have spent some cash, and they have even sold some assets, it seems like. And I guess they took on some debt here. But they, before that, after the pandemic, they paid it down, they took it up again. Now they have paid it down and it's around the same. So I'm gonna go in now and check the debt. Look at the earnings though, 425, but I mean, I'm not sure. Those 2 last years here for them looks pretty good. So I need to understand why it's so much down than in the last years. Probably some earnings miss or something. Let's check Seeking for that. Yeah, some misses here on April. And what was the one 1st of April? Orders tumbles in March. So they missed some orders or what? There's a fair bit of articles, but not so many comments. These guys are having a whole rating, and just want to read quickly through the comments here. They are talking about the depth. I'm just curious to see the depth for myself here. I'm just gonna read some comments. Reesius, UK, speaking of Kitty. You're from UK, nice. Yeah, I think I asked you that in another stream actually. Sorry for not remembering, but cool. Made a bit with GME today, nice. Will be interesting with live stream tomorrow for sure. It will be. Congratulations on the game today then. You played that nicely. But honestly, I prefer day trading these memes. So yeah, they are hard, right? I can't imagine like the day traders. I could never do that. But kudos to them for making it work. I know a guy on some of the forums that I have been on in the past. He has an insane return being a day trader. So it definitely worked. But I don't understand how he does it. So yeah, it's tricky. American Surfer, welcome to the chat. My family lost everything in 2008. No sell, GME, MC. Oh yeah, I'm sorry to hear that though. And I know the story last time GME was popping in January. There was a lot of similar stories about you know, having a little bit of a revenge on the people who caused the market crash in 2008 and stuff like that. So a lot of sad stories, of course, with the families going in, you know, poor financial situation. So that's not good to hear. But hopefully you can make some money then on GME and AMC, like you say here. But just for the record, I'm not involved in any of those, so I'm not gonna speak too much about them. But I can't wait for the stream tomorrow to see what Ron Kitty is saying about GME. We should listen way more to him than to the laughing stock, I think. Value, okay, PE 5, price to sales 0.41, price to book 172, EV to EBITDA 382. Okay, cool, nice, thanks for that. I do like this though, and oh, sorry, forgetting what I was going to do. Checking the debt. We saw the goodwill on books, right? So nothing new here. Long-term debt 400 million. Yeah, debt. Yeah, 400 senior notes due 28, so they have time on that for sure. All of it, like, no, oh, sorry, I read that wrong. Yeah, so it takes some off here. Unsecured senior notes due to 2028. All right, so the debt is an issue here for some time now, but and it's high. I mean, but I think look at the cash generation, so I think they will be fine here. And historically, also they've kept a little bit of cash on the books, you know. Operating cash flow now $5 I get, and 326 in free cash flow, which is pretty good, you know. As for valuing this though, Value Hunter, I'm not sure what I would put as a fair value here, but you gotta keep in mind that they pay the dividend as well. 425 in earnings, 3-year average 253. I was gonna say like between maybe where it is now $25, but you know, I can see this also going to higher than that, like 20, let's say 30 then. You know, I know that's a big gap, like between all the prices I said now, but I mean, this was, didn't we check it was at 30, right? Not too long ago either. And you have to have some respect for these numbers. The last 2 years has been good, and keep in mind they improved the margins a lot too. So let's just check some of these articles. This guy is having a hold rating on them. What do you think is fair value here, Value? I think this will bounce up again. I don't think it will crush below the 52-week low for a long time at least. I don't think you will see that big of a drop. I have, based on the numbers and what we have seen now, I think maybe this will find some support here. I agree a little bit with what he's initially saying here, to be honest. Like, however, the current valuation, and when he wrote it was like $23. The current valuation does not provide a sufficient margin of safety, and it is recommended to wait for a price decline before investing. I kind of agree with that based on what I've seen so far, Value. Actually, I kind of like the start of this in terms of what I saw. It's a wonderful company with growing operating margin, capital efficiency, and returns over the past few years. But this is a cyclical company where part of the good performance over the past few years was the result of being in the uptrend leg of the trailer cycle. A valuation based on its performance over the cycle showed that there is currently not enough margin of safety. I would wait for the price to decline before investing. We saw these 2 good years, so this is what it's talking about with the uptrend, and also we saw the increase in book value and all that stuff in revenue. They have bought back a little bit of shares. they have seemed to manage the debt somewhat good in these years, and they have control on the short term. Not worry about that at all. Earnings up, they pay the same dividends. It looks stable, you know. Retained earnings to $9 per share this year, so it is growing. So I kind of like what I see there, but in terms of where it is right now, I'm not sure. I would definitely want this to drop a little bit more before I wanted to enter, if I ever want to do that. And I mean, maybe actually I would need it to pull back to like 15 or closer to 15, you know. So the transportation system segment, it's the biggest revenue and operating profits contributor. Over the past 5 years, this segment accounted for about 90% of the total revenue and 80% of the total operating profits or loss before corporate charges and inter-segment elimination, referred to chart 1. So this one. So they probably have a presentation, right? One thing I didn't mention so far, I did mention it, but I didn't focus on it, is the short interest. And maybe with the talk of the cycle ending and all that stuff, it's justified now, but it has been dropping though. If you shorted it here, you are already up a lot, so I'm not sure if that short interest will decline or how this will play out, but it's interesting to see if maybe the short interest grow from here. That's something to keep in mind also. Maybe then you will get a decline to the levels I was talking about. All right. Didn't see too much stuff there, but let's just look at this. I'm not going to read all now, just maybe the conclusion here. What is this guy having for value? A value based on two scenarios. No further acquisitions. This assumes that there will be another 360 million acquisition in year 6. Saying like $26 per share. And I don't disagree too much, but I said like from 20 something to 30, right? Which is why I also wanted to get it to drop down to 15 to try to get like a double on it, or close to a double. Probably a pretty good article. He has like different scenarios and stuff like that. Kind of agree with this guy though on this company value. let me know what you think, and if I missed something or misunderstood something. You know, this is first time I have seen this ticker before in my daily movers, but it's been a long time since I've done them. So let me know if I'm missing something. I do like the last 2 years, but I don't know too much about the industry and the cycle and everything like that. And if it's on the declining now, which you could argue that you see that somewhat in the historical numbers here. Maybe this was the top, and it got up to 30, you know. And I mean, before that, it went down to 12, 13, you know, 12 to 15 here. And then boom, you got the 2 last years doing pretty good. And then now, okay, let's see where it goes. This is interesting enough for me to put in a tracker, I think, because I want to see the development here, and I want to see if I can get a drop, and maybe then just watch it on the charts. So I'm definitely gonna add this value. So thanks for that ticker. I'm just gonna. I know it's not that great, but who cares? I got it here. Current price, what was it? 2071. I think I will put like just straight 15. Oh, that was a little bit high. Straight 15 to see if it comes down there, and then you know, my conditional formatting will light up, and then I will revisit if it ever gets down there. But I think I'm gonna put a medium on this because I like the fundamentals, but I'm not sure if you're gonna get the decline so that it gets interesting. I'm just writing what I saw in the fundamentals. Seeking Alpha article suggests they are now at the end of the industry cycle, and that the performance will decline. In general, they have managed to grow book value and revenue, plus they are also increasing their margins and cash generation. I just we didn't see who owns this, and I see John Boss. I want that name, John Boss. So John Boss here has been buying shares. He's the director. Of course, he's the director. He's the boss. So 60,000. That's not too much, though, but it's something, right? It's not too much, to be honest. Let's check whale wisdom as well. Yeah, I think I'm not gonna add something to my comments here. I'm just gonna add this now to the tracker. Good stuff though. First one added to the tracker. Thanks, value. There they are. The value is also saying the buyback loan seems to be returning 5% as well. That's actually something I should probably add to the comments. The share buyback. Ah, need to hit modify when I search them up, or else the script will misunderstand. Yeah, the buyback is a good point. And also the dividend there is maybe they will have to adjust it, but right now it seems good, right? Nice. All right, I have it now then. Here is the SFIX up 54% in a month, and then you have SPWR up 67, almost 68% in a month. So we're going to talk about them later. All right, I'm gonna skip Mastercraft, SFIX and SPWR now and go to EGAN. And EGAN is also trading 7% from the 52-week low. Look at the inside ownership here, 32%. So that's pretty big. The share price right now is $6 and the market cap is 177 million. Look, they show up as levered here, but the sheet does not issue shares. And they have cash here, 82 million. And they even have net excess cash per share, Long-term debt is almost nothing. It's well covered by the cash here, so not worried about debt here in this case. They trade above book. This is a tech company. Develops, licenses, implements, and supports customer service infrastructure software solution in North America, Europe, the Middle East, Africa, and Asia Pacific. It provides unified cloud software solution to automate, augment, and orchestrate customer engagement. It also offers subscription services that provide customers with access to its software on a cloud-based platform and professional services such as consulting, implementation, and training services. It serves customers in various industry sectors, including the financial services, telecommunication, retail, government, healthcare, and utilities. The company was incorporated in 1997 and is headquartered in Sunnyvale, California. So positive cash generation, and look at they almost have nothing in capex here. So their operating cash flow is almost identical to the free cash flow here. Also on the historical level, they are almost the same here. I wanted it a little bit higher, but at least it's positive, right? Earnings are pretty stagnant here the last years. I have to say, like, even if the revenue is growing a little bit at least, the past years here, it seems like it's on the, it doesn't seem to grow much, and they are not making any acquisitions. So maybe this probably needs a catalyst, right? Something that moves it. But we saw the high insider ownership, so curious to see who owns this. There you go. Oh, it's this guy Kanan. Ron Kitty talked about him, right? He owns 6.6%. Probably, and then you have probably the founder, right? Roy Ashutosh, number 4. No, those are probably the founders, right? So Oaktop been owning them for quite some time, actually. Here is this Kanan guy. He has it as his number 2 position, but oh, he only owns 2. All right. Interesting to see his name though, and I'm not sure how much I'm gonna hold that as a positive, but it's something. Value saying dilution when they have positive cash, possibly to cover a debt due, or are they issuing shares to insiders? Are you talking about this EGAN company now, Value? They have diluted in the last years here. And they might have done that to we can check on Seeking if anyone is talking about them, because hold on. What is this stuff? Hold on. Filotimo. Filaretos. I thought it was the same name. All right. Yes, EGAN outstanding shares increased despite cash flow. Yeah. Yeah, and the debt has been minimal in all those times, so maybe it's like a share compensation plan. I agree that doesn't look too good, and you know, holy shit, that was They do have stock option awards here. And we saw a lot of sellers here on insiders. But not recently though. It's a long time since last time. And there's no acquisition to talk about, so let's check. A misunderstood AI growth story at a mouth-watering valuation. EGAN shares dropped after the non-renewal of 2 customers, but management remains optimistic about the prospects of its core knowledge management business. EGAN's generative AI product, Assist GPT, has the potential to drive significant new logo wins. With nearly half its market cap in cash, trading at 9x EBITDA, we feel that the market is misunderstanding the company's growth prospects. We see a path to EBITDA tripling by full year 26 in our bull case, resulting in a material undervaluation at current levels. I just don't know, like this AI stuff. Of course, it's exciting, but everyone is using those sector now to talk about how good the companies will become. But I don't know too much about like who is gonna benefit in the end of this. That they're all probably gonna benefit, right? But if the whole thesis is based on that, it's a bit risky, right? The company noted on its last earnings calls that it's seeing positive momentum in new business activity given these new offerings, and that the number of potential customers doing a 30-day free trial program is more than they have had in the last several years. But at the same time, they lost customers, so they are valuing it at $16 per share. That's high. I right now I don't see the same. Pretty big drop here though, and it is finding some supports here. And I guess on the chart you can argue that this is what I want to see, like 570 as a floor, and then it tests it again, and maybe now again. So maybe it's worth paying attention to this in the future, but I'm not sure. I do. I can go through what I like, though. I agree with value. It's a bit weird that they issue shares when seemingly, according to the sheet at least, they don't really need to do that. Maybe that's some share compensation program, something like that, that we saw they had. So maybe that's the reason. I couldn't find any, like on the quick research, that there's some debt due or anything like that. But I just wish that look at the numbers from all these years. It's like it hasn't improved too much since the pandemic. And this guy in the article was talking about AI growth and stuff like that. So that of course may happen, but I want to see it. But they do have cash. That's what I like. They have a lot of cash also compared to the market cap. But I'm not sure. They have had cash all these years, you know, without too much to show for, really, in terms of growth. But now AI has come to change the game a bit, so maybe they will succeed with that. But now I'm not gonna add this to the tracker even, I think. But what do you think, value? This needs more. It just needs more to me. I was way more interested to follow WNC, to be honest. But also I like the owner Kanan or Kanan or whatever his name is, because I know Roaring Kitty spoke a lot about him, that he had some overlaps with him, and I even think he looked him up and saw that he was had some very successful picks. So he's a good investor. But I mean, he was owning this for quite some time, didn't he? Yeah, this one isn't for me, value saying. Yeah, I kind of agree. Source, they're like 22. End of 22. So he's down on it then, if this was his initial purchase. And you know, he started off well here, could have sold that there probably, but kept it. So yeah, who knows? Maybe his average down, I have no idea. That alone doesn't give me confidence enough to just add this, you know. So that's also why I'm not adding it to the tracker. Let's move on then. MCHX. Value saying, I prefer share count going down and only going up if there's a good reason. I agree with that, and I didn't catch that initially, so thanks for pointing that out, because that was a bit weird. And I assume it's like you said, for compensating their workers, or maybe even to pay the board or stuff like that in shares, which is a bit unnecessary when you saw the other numbers here. So I agree with that point. And of course, always like to see the share count goes down, which it has done here though, since the pandemic, pretty drastically too. But in the last 2 years, it has actually gone up 1 million again. But this is a media company, and this caught my eye because of the insiders. You see here, there's an insider having bought a lot now, and 15% up today. Edwin Miller, he has bought a little bit here in the last days. It was a new purchase in middle of May, and then he bought a little bit more, just a tiny bit more. Now he's just splashing the cash in here. So this was 2 days ago. So Edwin Miller, the CEO, is bullish, and you see he's averaging down a little bit at least, but he feels like this price point is good, around 140. And right now he's up a little bit on the investment. So they have been buying back shares here. Trades tiny market cap, 72 million. It's a little bit less than what I want, but 165. 81 cents in book value, 39 in tangible book. Pretty bad cash generation though, and also historically. Like, they need to do something with this. But no debt, no big debt. Also no short-term debt. The sheet is not issuing shares, but it even though it says levered here, it's because of the cash generation here, which is terrible. And it has been terrible for quite some time. So this is a media advertising business. Call analytics company that helps businesses connect, drive, measure, and convert callers into customers. All right. 9% ownership from the insiders. They do have cash, 12 million, but they don't generate cash. And you see, the capex is small, so not too much there. But if you look at their cash position historically, it's just shrinking and shrinking. Just want to see their operating expense here, 36, which is down. Tiny revenue though. It's like, I don't think I like this too much. But you can't ignore the spike up. How's this been on a daily chart? A little bit of a spike in volume 2. Seems like it's in a good trend. Oh, no one is speaking of them. There's nothing here. Look at the articles. They are very old. All right. But still, I don't think so. I'm not gonna add this. I think terrible cash generation. The insider is, 14% up today. I don't know what that is on, and the insider so far at least he's up on his investment. So maybe it's noteworthy that you have those purchases, but maybe they have some press release or. AI. It's all about AI these days, and rightfully so. It's a fantastic technology, right? They recently got some business, which is maybe a little bit of a game changer, but I'm not sure. I don't know this company at all. I'm not gonna spend more time on this. It needs way more. Let's move on. EYE. National Vision Holdings, through its subsidiaries, operates as an optical retailer in the United States. The company operates in two segments, owned and hosted and legacy. It offers eyeglasses and contact lenses and optical accessories products, provides eye exam through its America's Best Eyeglass World, Vista Optical, Fred Meyer, and Vista Optical Military, as well as Vision Center branded stores, and offers health, maintenance, organization, and optometric services. As of January 1, 2022, the company operated through 1,278 retail stores, as well as various e-commerce websites. National Vision Holdings was founded in 1919 and is headquartered in Duluth, Georgia. So that's a lot of stores though. Book value 1073. They trade at 14.5. Talk about buybacks value. We have some buybacks here from 92 million to 79. So let's see what's that about. You see the cash position also declined there. So no acquisitions. Negative earnings though this year. Fairly positive on the free cash flow. And on the 7-year average, they have 56 cents in free cash flow. So pretty levered. They have almost $1 billion in debt, 97 million in short term. They have the cash to cover that. Let's go into check the debt straight away. So there's some leases. There's a lot of leases. Okay, so these are due in a year's time. Which is more than my sheet said. Then this portion due in 28. So 311 million in you know, due in 25 in May. That's a lot for these. That's a lot for this company. A few insider buys in May for I. Okay, let's check it out. Yeah, you have them here. From like around 20. Whoa. So the first one, imagine this Randolph guy. He mistimed that by a lot. He's down ugly on that one. 1 million also, that's a big buy. It's probably here, right? Oh. how is this? May 22nd. Oh, is it a year ago? I'm so stupid. Thanks, value. I should have checked your comments. Don't. I'm not gonna make an excuse for you, value, that is in New Zealand here, but bear with me. It's getting late here. I've had a long day. Yeah, now he's still down though. He's still down a lot in this purchase, but he did average down here. And then you can see he has bought in May, maybe frequently then. You see there's some May purchases back here too, from other directors. So this Randolph guy, he averaged down almost $500,000 here in early May this year. And it's up a little bit on those. And then you have the CEO buying also. These are fair amounts, you know. But I'm just curious, this is the Randolph guy, if we can find his salary. This guy who also purchased owns 1.4%. Here's this guy. They don't own too much of the company. Randolph Peeler. So he's not listed here. Because he's the director, right? Some nice salaries on these people though. Anyways, never mind. He's down though, but also average down, so something to keep in mind. Almost a 10% short interest in this company as well. And they do trade 6% towards the 52-week low, so it is down now. Just want to check the margins because they also seem to be down. I'm not sure about this even. I think I think I don't like it enough to put it in tracker. Strong catalyst, okay. What is that then? These are recent. To the rollout of remote exam capabilities, the introduction of remote exam technology in Texas could significantly improve operations and contribute to high single-digit same-store sales growth. All right, so again, he's basing it on something that they're going to implement, and maybe will improve their business. But if as it stands right now, I don't think this is too interesting, to be honest. Value saying balance sheet is showing recent depreciation amortization of around 100 million per year. Where are you? Here? Yeah, 100 million per year. Excluding that, the net loss is more a book loss, it seems. Yeah, okay. What do you think, Value, in terms of the cash generation? And I don't know about this catalyst that this guy is talking about here, though. However, I see a very strong catalyst that could drive up SSS performance from the low single-digit percentage seen in March and April to high single digits pre-COVID averages SSS growth. And this could potentially lead to I achieving the high level of management's guidance. The key catalyst here is I's remote rollout in Texas, which I note is not part of management full year guidance. For starters, when I say remote, I mean remote exam technology. I see this as a game changer for I in Texas because it is currently America's best, largest market, and rolling out remote exam capabilities there should have a meaningful impact in 2H of the year. I currently operate 130 America's Best store in Texas. Assuming that the number of dark stores, those with no optometrists, and dim stores with some optometrists but below desired levels in Texas, is similar to that of the overall chain, then the introduction of remote medicine could meaningfully improve operations at around a high single-digit percentage of the total fleet in Texas. The impact from this rollout is going to be huge because it enables double-digit productivity in sales. Alright, so there's a catalyst there, though. So if you are interested in this, you should dig more into this stuff. But for me right now, as it stands here, it needs more. I do like some things though, like the share repurchase. But I think this needs to generate more cash, and I'm a bit worried about the debt, even the short-term debt that was due in 25. So I'm going to skip it for now. Let me know, value, if you see something else here. So BLMN, Blooming Brands, Restaurants, owns and operates casual, upscale, casual and fine dining restaurants in the United States and internationally. The company operates through two segments, US and international. Its restaurant portfolio has 4 concepts, including Outback Steakhouse, a casual steakhouse restaurant, Carrabba's Italian Grill, and a casual Italian restaurant, Bonefish Grill, and Fleming's Prime Steakhouse and Wine Bar, a contemporary steakhouse. As of December 26, 2021, the company owned and operated 1,013 full-service restaurants and franchised 157 restaurants across 47 states and 156 full-service restaurants and franchised 172 restaurants across 17 countries and Guam. The company was founded in 1988 and is based in Tampa, Florida. So pretty good revenue here, and look at the share buyback. That's pretty good actually. 7% short interest. They are at $20, a little bit on the high side on market cap, 1.7 billion. They do generate almost $5 per share in operating cash flow and around $1 in free cash flow, which is all right. They do pay this dividend, and it has been growing a lot since the pandemic. Also, the dividend earnings positive for last 3 years. But straight off the bat here, I think this is pretty fairly valued, to be honest. It's at a new 52-week low now, so you might get some opportunity here to, if this goes further down, you know. It's at a new 52-week low now, so you might get. So it's a little bit interesting to see where this trades at right now. I assume they lease the restaurants and stuff, so they're trading well below, above book value. They have 300 million in cash, pretty high debt, or maybe a lot of this is leases. 174 in short term. They have 300 in cash right now. 170. So let's check the chart. Big drop though. Next support level here at the 18. Maybe even down to, 17. Despite being close to fair value, there are still many challenges. Yeah, around fair value. I think it's even a bit above that, to be honest. But of course, the dividend is nice here. Who owns this? Restaurants. Let's check the leases. They probably have a lot of leases here. There we go. Values ahead of me. 1.1 billion is leases, 900 million in debt. Thanks, value. You're too quick. You're too quick for me. So here is what value is seeing. A lot of the debt then is leases, but also that's some serious debt as well, though. What are they talking about with debt? Senior secure credit facility, revolving credit facility. 635, 2025 notes, and then 300 in 29. Is this one you need to worry about. During 13 weeks ended March 31, 24, the company repurchased 83.6 million of the 2025 notes, and as a result wrote off 0.8 million of the debt issuance cost. That's good. Is this all? They have a revolver here. It takes off some of this debt though, but still, with the revolve, okay. But I wonder how they increase, like, they've increased this dividend. No comments on that. I think this could drop even further, to be honest. These 3 years are decent, but also in those 3 years, where are we, from 2022? You know, it's back. It's back where it was trading in 22. Much smaller share count, but you know, not impressive growth. And way more debt too. Yeah, I actually agree with you there, Vali. I was even gonna say like a little bit less than 24. And you know, we were reading this article here. He said like, despite being close to fair value, and he wrote this at 21. Yeah, I kind of agree with the, you know, between what you are saying and him, like 21 to 24. It's now at 20, so I agree it would need drop a big drop, but yeah, they have bought back shares. I like that. The leases, it takes off some of the depth, right? And then the rest is a little bit less than what it appears like initially. And it's far out as well, and they had that revolver. So yeah, I'm not sure. Like, I would want a little bit more cash generation in this one, even though it's not bad at all. That's not what I'm saying, but I'm not even sure. I think it will drop more though, but I'm not sure if I'm not sure if it will drop down to a level that I'm comfortable, you know, taking an entry position or something like that. So because I think I would need it to drop even more than, you know, down here 16 15. I think I would like a even bigger drop, and I don't necessarily see that it will, based on the fundamentals, which is, I guess, good for the company. But this is what I'm saying, like, I'm not too interested in this one. But some of the other ones we have checked today is worse than this, in my opinion. So this could be worth tracking for you if you are interested. I also have, I prefer to, you know, I prefer companies without dividend, but it's not like it puts me off. But it has been increasing as well, though. A lot in capex the last year. Pretty stable operating expense, even historically here. Yeah, I'm not going to put this in my tracker, but there are definitely positive things there. I need a bigger drop. A lot in leases though, 1.1 billion. So it appears more levered than it is. That's something to keep in mind. I wish though, value to the point we are making here, I wish we saw, you know, in my sheet it says 4% inside ownership. At these levels, at 52 weeks low, if you see an inside purchase here, like a massive one, there's a complete lack of it. But if you see like a big inside purchase or something like here, that would be meaningful in my opinion. But I guess they are buying my shares though, so if they continue to do that also, that's good, and pretty aggressively, like to the point. They are buying back aggressively. Yeah, no, I agree with that, value. Value is saying I'm going to set an alert for 16 and then look again if it gets there. And that's what you want to do. You want to track things, right? I'm just curious to see like the yeah. And on the chart alone, value, you know, if it takes out this bottom, you might get 16. But I kind of want it down here, you know, which is a big ask, I think. Let me know, value. I'm not gonna put in my track. Let me know if it gets down to those levels. That will be a bit interesting. All right, I'm seeing we are running a bit late here. I just want to go quickly through Mastercraft and SFIX as well, and maybe SPWR. You see a Mastercraft, we have covered them in the past now. They appear very interesting to me. Big cash position. Look at the market cap, 349, 100 million in cash, excess cash. Oops, sorry. They have very little debt. They have full control of the debt. They are also buying back a little bit of shares. Big revenue drop, which is why you get this opportunity, I think. And it does trade 12% towards the 52-week low. I have put an interesting entry point at around $18, but I've also been tracking it for a year now, and it doesn't move a lot, this stock so far. But what is extra interesting, the fundamentals looks good, right? But what is extra interesting then is now the chart on the technical, very basic level, but it looks good there. And then you also see this insider just adding up shares. Look at these two, even this is a lot of money, and they've been buying in 24, you know, since March. And look at the price, doesn't move too much. So I'm this one is one I track closely, and I'm probably gonna add it to my portfolio soon, because I like this one. In terms of upside, I'm not seeing like a crazy upside here, but maybe, you know, maybe 35 around there, which is kind of why I want it down to 18, 17, you know. Yeah, I just wanted to pull this up today to let you guys know that I'm planning to make an entry here if it starts to look a little bit more promising on the chart. It's almost there. And also in the beginning of the stream, I brought up an article about them from some guy on Yahoo Finance that we're talking warmly about them as well, like under the radar stock that I think will overperform. SFIX, they're up like 50% in a month. I've had them in the tracker for quite some time. They've diluted though, so that's something. 3.8, and how much were they when I added them to the tracker? So they were at 665 when I added them, and now they are at 380. So they have dropped quite a bit since then. I had actually an alert at 550 then. I added them in 22, so it's been a while since. But now finally they are a little bit up from the lows at least. And if you do look at the chart, you can see a pretty good spike up here recently. So it does look a little bit good on the technical side. By the way, I'm using a little bit of few indicators and stuff like that I haven't put on the charts for the stream. So when I say good technicals, I look at a little bit more than just this. I just don't want to stream it yet because I'm a bit, you know, I don't know too much about technical analysis, so I want to fine tune it and try to make it work and prove that it works, what I'm looking for before I start to talk about it on the stream. But this does look good on a chart even a while ago, and I spoke with Dane about it in like end of May, and since then it has just gone up, you know. And should have bought back then, which is just like a week ago. You would have been up quite a bit actually. There was an earnings report beat by a lot too. So yeah, just wanted to visit them because you know, fundamentals doesn't look too good, but then now they have a new earnings report that is killing it, and all of a sudden you get this spike. So this is something, you know, that's why I have them in track. But and I spoke with Dane about it before the earnings report, so it's something that did caught my eye, you know, but I just didn't have the money then to put it in, and but it's good to see that also a little bit on the technical side of what we are looking for there actually ends up working so far, at least. But now it's just a question to fine tune it a little bit and improve how to use it even. And then the other one was SPWR, which is a solar company. 54% ownership. They are also up quite a bit in the past days here. Since April, up from $2 to $3.70. You see, they a little bit like all the green stuff. They are struggling a little bit with the cash generation, and you know, they've sold some assets and stuff like that. They are negative in earnings now, also on the 3-year average. So it's not excellent, but they're a bit. The share count is a bit down since 21 at least, but still up a lot from after the pandemic. I'm not too familiar with this company, but I have put them in tracker, and I think we added them not too long ago. And also that was a little bit with the in the back of the head that the solar chart in the dashboard looks bullish at the moment. So what I was writing here, oh, it's this one. I remember now, the high short interest. Look at the short interest, 88%. So high short interest, big short-term debt, but they seem to have financing for it. Fundamental does not look great, but I'm adding this because the high short interest. Okay. So I guess also the spike up there is because of the meme stuff that is going on now, maybe. And then when you have such a high shorted stock, you will get some of it dropping off on this one. So yeah. But cool though. Some tickers in the tracker are really moving, and you know, preferably I would own a lot of these, but I haven't been able to diversify and put my money into there. But I'm planning to do it now in the short term. Now I have the cash ready. I'm just looking for some catalyst that makes me pull the trigger, you know. So and Mastercrafts is probably going to be one of my purchases. Just for full transparency. But okay, guys, I think that's it for me today. It's like 3 more minutes and it's midnight here where I live, so I need to go and get some sleep. But thanks for everyone who has tuned in today. Thanks for everyone who has contributed in the chat. Thanks, Value, Resius, and American Truther. Really appreciate it. Appreciate you guys sticking in regularly now. And Value, thanks for the ticker. I ended up adding it to my tracker sheet, so thanks for that. It kind of looks good, but needs a little bit of a drop. I think, I'm not sure when Dane and I will be on this week, and we will update you guys on X if you follow us there. So pay attention to some updates there. And but actually forget about us. The main story this week and weekend will be Roaring Kitty's live stream tomorrow, Friday. That's going to be amazing to see him back. I can't wait. Probably not going to sleep tonight because I'm so excited for it. So that's going to be epic, and very curious to see his new, if he has a new style, if he has developed the style, if he has cut stuff down or added things, if his sheets looks the same as it did back then. his comments about GME, his comments about what he has been doing. I'm can't wait for it. But then of course I'm not going to be able to watch it live, but I will definitely watch it in the weekend. So yeah, pay attention to X if you guys want to know when Dane and I are going to come on. If you don't hear anything there, you can assume that we are on in our normal time. We're going to try to do that, but I'm not sure. I might have to ask him to do on a Sunday this weekend, but let's see how it goes. Anyways, thanks for everyone following, and we really appreciate you guys spending time with us here. And then we will see you on the weekend, and then hopefully everyone will watch Roaring Kitty tomorrow, and we can talk about it on next stream for sure. So yeah, thanks again, and enjoy the rest of your day wherever you are, and I see you.